Asda once ruled Britain's supermarket wars, but today it has lost nearly a third of its customers, buried under £4 billion in debt, and cannot stop the bleeding. What could break a retail giant that once promised to never be beaten on price? The truth behind Asda's collapse is more shocking than you have heard. So what went so disastrously wrong? At its height, Asda stood as the supermarket for the value-conscious shopper, a promise built into every green and white aisle. Around 2014, Asda commanded nearly 18% of the UK grocery market, according to Kantar data. That made it the clear number 2, just behind Tesco and far ahead of Sainsbury's and Morrisons. For millions of families, Asda was the default choice for stretching a weekly budget. Its advertising hammered home the idea of everyday low prices, and the famous pocket tap became a national symbol of getting more for less. This wasn't just marketing, the numbers backed it up. Asda's share of the market meant that almost 1 in 5 grocery baskets in the UK came through its doors. The big 4 supermarkets each carved out a role: Tesco for convenience, Sainsbury's for quality, Morrisons for fresh food, and Asda for value. That balance held steady for years, creating a sense of predictability in where people shopped and why. Industry analysts like Fraser McKevitt tracked these trends closely, noting that Asda's dominance in value was both its strength and its shield. As long as price was king, Asda's crown looked unshakable, but holding that position would soon become harder than anyone expected. Aldi and Lidl didn't just enter the UK market, they rewrote the rules. Starting around 2014, these discounters chipped away at the old supermarket order. They offered prices 20 to 30% lower than the traditional chains, but that was only the beginning. Their stores were clean, their own brand products matched or beat the quality of established names, and suddenly, bargain shopping became something to brag about. The idea of being a smart shopper took hold, especially as household budgets tightened. Over the next decade, Aldi and Lidl's combined market share surged by 10 to 12 percentage points. Shoppers who once filled their trolleys at Asda switched over, drawn by the promise of both savings and quality. Industry analysts like Fraser McKevitt tracked the numbers as Aldi and Lidl pulled millions of customers away from the Big Four. The impact was direct and relentless. Asda's footfall shrank, and the old price-based loyalty started to evaporate. The discounters didn't just undercut Asda's prices, they made value feel modern and even aspirational. For the first time, Asda found itself squeezed from below, unable to win on price, and no longer the obvious choice for families watching every penny. The pressure wasn't just about losing sales, it was about losing the very reason people had shopped at Asda in the first place. Asda's financial structure today is a study in pressure. After the 2021 buyout, the company found itself saddled with nearly £4 billion in debt, money borrowed at a time when interest rates were low and the risks seemed manageable. But rising rates have turned that borrowing into a burden, and every uptick means millions more flowing out of Asda's accounts to lenders each year. Instead of funding new stores, staff, or price cuts, a growing share of revenue is diverted to cover loan repayments. To find cash fast, Asda began selling off the ground beneath its own feet. In 2021, it raised £1.7 billion by selling 27 warehouses to Blackstone, then leased them back, a quick injection of cash that turned fixed assets into long-term rental bills. By 2025, another £568 million came from selling 24 supermarkets and a key depot, locking Asda into decades of rent payments to pension funds and investment groups. These deals offered short-term breathing room, but added to the fixed costs that now squeeze every part of the business. The result is a relentless financial vice, leaving less and less for the things that once set Asda apart. Chaos followed the split from Walmart's technology. Overnight, Asda lost access to more than 2,500 core systems. Everything from ordering to payroll had to be rebuilt from scratch. The company poured hundreds of millions into a rushed multi-year IT overhaul, but instead of a smooth transition, the result was confusion on the shop floor and in the back office. Supply chain glitches left entire aisles empty for days at a time. Trucks arrived at depots with the wrong goods, or sometimes nothing at all, earning the nickname "ghost trucks" among warehouse staff. Former IT managers described frantic calls as systems crashed mid-shift with no backup in place. Store teams struggled to keep track of stock, and customers found basic groceries missing from the shelves. In the scramble to fix the fallout, over 150 jobs disappeared, mostly in head office and logistics. Union representatives reported staff stretched thin, morale sinking as workloads grew and mistakes piled up. For shoppers and workers alike, the promise of a seamless Asda experience vanished, replaced by uncertainty and frustration. Asda's struggle is not just about groceries, it is about what happens when debt outweighs trust. As every penny leaves the stores, the real cost lands on British shoppers. What breaks next?